Welcome to the Crypto Economist channel. Today we'll be going over on-chain analysis. So let's begin. What is on-chain analysis? So on-chain transactions refer to those cryptocurrency transactions which occur on the blockchain. That is, on the records of the blockchain and remain dependent on the state of the blockchain for their validity. On-chain transactions are supposed to occur in real time in order to keep blockchain transactions secure, verifiable, transparent, and instantaneous.
All right, so what on-chain analytics tells us about Bitcoin transactions? So on-chain refers to all data that is natively stored on the blockchain. It tells us about the security, verifiability, transparent, and instantaneous issues on the blockchain. So it includes details of every block, details of every transaction, and smart contract invocation and usage. So the on-chain analysis gives us the volume that is being used to judge whether a crypto asset is actually being used and when and how it impacts its price and value. So it figures out who is using Bitcoin, how they're using the network, and when certain metric points to either bullish or bearish seasons within the space. How can on-chain analysis help cryptocurrency traders? So on-chain analysis is fundamentally driven. It takes that approach rather than technical. So this type of analysis kind of focuses on exclusively on one crypto asset by looking at its historical trends. It also is a vital tool that helps individuals speculate value of the cryptocurrency from its utility value. So by examining, for instance, user adoption and miner activity using blockchain data, we can see whether the crypto price is justified by the fundamentals. On-chain analysis can trace its history as far back as 2011, so it doesn't get the full picture of when Bitcoin was incepted back in 2009, but it does go as far as 2011, which isn't too far to do this comparison. So by comparing the value of the network with the volume of transactions recorded on the blockchain, we can identify when a cryptocurrency is overvalued. So this analysis really helps really give a price, fundamentally speaking, of where the crypto should be, whether it's overvalued or undervalued. Help crypto traders. So the major benefit of on-chain metrics is that it illuminates investors' behavior and network health in real time. So the two important on-chain metrics that we need to watch for are the number of active addresses and the number of transactions, which are two proxies for the demand and usage of a blockchain network. When these two metrics diverge significantly, then it could indicate an overheated market and heavy reliance on short-term speculation. We can also gain insight into investor behavior by examining the length of time an address has not moved Bitcoin using the UTXOs, unspent transactions, set and aggregate these to see how many investors are HODLing crypto. So if a rising number of investors are HODLing, then we can presume that circulating supply is lower, which should increase the price of demand at a constant and also points to confidence in the asset's future performance. So on-chain metrics provide a good insight into the real-time state of the blockchain network, making people aware of these metrics. Traders can capitalize on the opportunities these tools present and enhance their analysts of the market.
So now we're going to go over different Bitcoin price models and ratios. Most of these models and ratios that we're going over are from Wooble. This is from Willy Woo. He is well known in the crypto space, well-known on-chain analyst. But anyways, let's go into the first model or important metric that is used, and that is realized price or realized cap. And this is the value of all coins in circulation at the price they last moved. In other words, an approximation of what the entire market paid for their coins. In this chart, realized cap is mapped to the price domain by dividing by the total coin supply. So another metric that is used to measure the Bitcoin price is the Vwap price, which is abbreviation for volume weight average price. And this is an approximation of what the entire market paid for their coins using market price and on-chain volume. So another metric that is used to measure Bitcoin is Nvt Price. The NVT values the network using its on-chain investor volume. In other words, this is the monetary velocity. A lot of people like to think of the NVT as the PE ratio, so price to earnings ratio, but instead of company earnings for Bitcoin, it's investor volume. So to map NVT to price, so this ratio divides the total network value by the daily US dollar volume. And this ratio determines if Bitcoin is overvalued or undervalued. It's one of the popular on-chain metrics that's used for cryptocurrencies. It's also been improved over the years. In other words, Coinmetrics improved it to provide a more accurate assessment of the network value by including a 90-day moving average of transaction volume. As you can see, there's other models that are still in the experimental phase that are being used in order to measure Bitcoin. So just a couple examples. Willy Woo is looking at creating a cumulative value days destroyed metric. To be honest, we don't want to speak on it since this is still in the experimental phase and has yet to be proven as a valid metric in the crypto community. So we'll just give you the link here where you guys can come check it out and see if these experiments are worth using for your own cryptocurrency strategy. As you can see, Woobull does have a lot of tools that can be used in order to measure Bitcoin and make investment related decisions in this crypto space. So for instance, one chart that they do have is that they have a chart where it shows their ROI that's adjusted for risk compared to other assets. As you can see in the chart, they measure Bitcoin versus the other assets which they have here: Ethereum, US stocks, US real estate, bonds, gold, emerging currencies, and oil. So highly recommend this site. It's a great tool so that you guys can make Bitcoin investment decisions.
Analysis does have some pros. It also has some cons. And I think Ivan Ontek's article that he created here not too long ago gives a good analysis of the criticisms of on-chain analysis. One of them has to do with small data sets that they work with. So it's not like analysts can create models based on 100 years of stock market data, because crypto is not even a decade old, so it's not a lot of data to pull from. Also, data quality can be a bit dicey, especially when a lot of the volume in these exchanges can be fake, and some wash trading going on around there. So it can cause some outliers for a lot of the data being collected on-chain. Also, another hazard lies in comparing on-chain metrics across multiple networks. So analysts need to process carefully to avoid drawing premature conclusions. All in all, these factors make it difficult to develop an accurate model for these price valuations in crypto. And some critics are just flat out against on-chain analysis, period. They believe these companies undermine the spirit of crypto, especially with companies like Chainalysis working with government officials to link individuals to blockchain transactions. To them, it feels like the state is preparing to drop a wet blanket on our privacy party that we're having in crypto. Leading players of the on-chain analysis space. There's three that kind of stick out, and one is Chainalysis. Chainalysis was founded in 2014, is headquartered in New York, and the firm is known for its annual reports, which are primarily focused on the connections between cryptocurrencies and criminal activity. The products that they offer include KYT, which stands for Know Your Transactions, which helps businesses stay compliant with regulations as they interact with the Bitcoin blockchain; Reactor, which helps people and businesses identify potentially illegal and or criminal transactions as it relates to Bitcoin and money laundering; and Cryptos. It helps individuals or businesses to assess the profile of cryptocurrency companies based on their KYC compliance and other related data. So change analysis is best suited for businesses concerned with legal compliance as they utilize digital assets. Another one on the list is Coinmetrics. This firm is a little bit different from Chainalysis, and it has 3 in-house products. It includes network data, market data, and indexes. Coinmetrics are best suited for individuals or businesses concerned with investing in the crypto markets, as to provide a very in-depth look at all the relevant market data that's out there. So with the aim of informing sound investment decisions for investors and businesses. Whereas Glassnode, another chain analytic data provider, this firm takes a different approach to blockchain analytics, deviling away from products per se, and instead focusing on 3 broad groupings of data. Studio, which typically provides users and graphs charting factors like on-chain activity, entities, top and bottom indicators and addresses, the metrics, across ranges of assets, and the insights that provide users and reports, including market movements and exchange activity. So Glassnode is targeting individuals and businesses looking to gain more insight into these digital assets and to make better trading and investment decisions moving forward.